The 4-step method to high-performance trading and the 7-step daily routine for high-performance traders are both free downloads. The 4-step method for high-performance trading is about developing the mindset and the routines to increase your confidence and your ability to execute your trading edge in a live trading environment. Constant progress. 7-step daily routine for high-performance traders is an audio program download designed to help traders bulletproof their day-to-day habits, discipline, and develop a winning mindset. Again, the link is in the description box below. They're free downloads. Let's get started.
G'day traders, Stacey Burke from Stacey Burke Trading. Today we're going to be going over some playbook best trade setup examples from the week. We're going to go through each session front side. One example from Asia from the front side, one from London, of course one from the US session front side. Now today we're going to kind of blend a bit of mindset reset again with technical, and I want traders to understand simple, reproducible setups on any instrument. They're scalable in size, they're frequent, there's no science projects. And what that means is this: if you're taking trades and asking me, was this a good trade? My question always is for that individual, what setup are you hunting? What setup is it that you're trading? So today we're going to go through some specific playbook trade setups, instrument irrelevant, and the sessions that they occur in, the opportunities that were there for Asia session traders on the front side, London and New York, and the understanding that one or two high quality scalable parabolic opportunities outweigh 5, 10, 15 mediocre 50-50 trades that are just trading movement, no science projects, and it shows up every week. Because why is that? Because we have Monday, Tuesday, Wednesday template, Wednesday, Thursday, Friday templates. Friday is the closing range on the backside of the week, day 3. And that sets the tone for Monday. We start from Friday's closing price on Monday. That's where our opening range starts to auction from. Day 1, Monday, opening range. Day 2, on the front side of the week, typically expands the range. Day 2, that's Tuesday. And on day 3, Wednesday, that's the midpoint range of the week. We're going to look at some specific examples for traders that occurred at the midpoint range of the week. That's the front side. That's the escalator in a lot of cases. And then on the back side, Wednesday resets to day 1. Thursday's day 2. We can look for range reversal opportunities, or in some cases, if it's a trend trade, or if the market's been in a larger 3-day box, after Wednesday, we can look for a range expansion opportunity on the backside. And of course, Friday, day 3, is the closing range of the week, and that is the backside. We will often look for the elevator type of opportunities on the backside. Monday's day 1, Tuesday's day 2, Wednesday's day 3 on the front side. Wednesday's day 1, it resets into the backside of the week. Thursday's day 2 and Friday's day 3. That never changes. You understand Monday, Wednesday, Friday, the weekly cycle. That's when we can therefore then focus in on 3-day setup opportunities. Day 1, day 2. Wednesday being day 3. We have a 3-day template. We can also focus on 3-session setups when we have markets that give us signals. We've talked about the opening range and initial balance, but markets that close in breakout, we can have 3 days of breakout traders in the markets. Day 1, day 2, day 3 longs, and the same thing for shorts. Have our first red day, first green day signal days, the inside day for false break or trend trade opportunities. Now, often on the front side of the week, we can look for possible day 0 setups, a 3-day template. And if Tuesday typically expands the range, or Monday, in some cases, we can look at a 3-day template with a day 0 setup. We have markets that close and breakout. We can be looking for parabolic 3-session setups. As I always mention, often on Thursday, we can look for short squeeze opportunities, especially on the metals. Now, if traders are focused on one instrument and they've missed the boat because it's moved in an earlier session, often we can see the low-hanging fruit trend continuation. Sometimes that's our only option. We can't get the 5-star opportunity, so we hunt out the next best situation, which is always the low-hanging fruit. That's the trend continuation for a market that's already left the station. And if we have a larger time frame template, we can look for a first bounce or a first bar opportunity on a newsed momentum catalyst trade setup, always in line with a longer time frame setup. Now, if Monday's day one on the front side of the week and Friday's closing price is where everything begins the auction process from, a 3-day setup that can possibly give us a larger risk-reward opportunity would be a Thursday, Friday, Monday template. Now, one of the things that we've talked about with building your watch list each day or each evening, we can look at weeks that have closed in breakout, weekly closes in breakout. This is on the front side of the week. We can look at Fridays that themselves have broken out and closed in breakout. We can look at lowest or highest closes of the month or the week that we're currently trading in. And we can just look at a 3-day template again. Everything is based on the daily close at 4:59 New York time. I use New York closing charts. Now here's just a little example to kind of paint the mindset of where I'm coming from, because there's a lot of traders. We can look at just multiple types of mindset and behaviors of traders when they come to the market. There's traders that, for example, trader A, I trade every day no matter what because I'm smart and I always catch a move. And I mean that in a positive sense, in that there are several traders who are very in tune with the market. They have their process, their daily process, and how they approach the markets, and they're very good at what they do. And they typically, on any given day, can extract a certain given amount of profit out of the market. And then there's trader B. I trade the same instrument every day. I know it very well, and I usually get good trades. Again, the same type of approach, in that an individual has specialized maybe in gold, or they've specialized in the euro or an index, and they know it intuitively, and they know what type of opportunities they get, what time they take their trades at, and they tend to get profits out of the market on a regular, consistent basis. And then there's trader C, who I would identify myself more with, in that I hunt out specific trade setups on any instrument based on the template that we just talked about, Monday, Wednesday, Friday, that will offer me the greatest risk-reward return opportunity if those trade setups show up. Now, of course, we got our 5-star and we got our 3-star, but that's my approach. That's my mindset. I don't care what instrument it shows up on. I'm just looking for the opportunity where the trade setups that offer me the greatest opportunity for profits show up on any given instrument. Now, let's talk about trader C for a second. This is who I identify with. I've talked about this repeatedly. We've talked about feeding the beast. We've talked about nail and bales. But realistically, what I'm really looking for is one really great scalable opportunity front side, and one great scalable trade opportunity on the backside, because those are worth 10 times in most cases. Little piddly 50-50 scalps in and out, and stressful moves and catching moves and grabbing pips where you can't actually put size on them. So my perspective, my approach, my mindset is this. I'm quite happy to sit around and wait until I get my scalable opportunity that I can pile into the ACB, the ones that I call the ACBs. And that's what I call the ain't coming back. So that means once we're in, they're probably going to go right to the close of the day. Those are the opportunities that I'm hunting. That's my mindset. I'm not trying to go to the market every day and catch a move and be a smart genius, because I know ultimately I can pick directions and follow little candles and catch moves and grab pips, but ultimately they're not scalable in size. And what that requires, number one, is a bit of patience from traders. But when you have that understanding of what you're actually really looking for, simple, reproducible, repeatable, frequent, scalable trade setups, then developing the expertise about how to execute those, because you have done that repeatedly through repetition. And then the discipline to sit on your hands and not do anything stupid in between to sabotage your good results that you get from your scalable great trades. Which comes back to something we talked about earlier about playbook trade setups. People talking about, I caught this move, I caught that move, but which setups do you make the easiest and the most money on? Well, I just trade this market every day. I just talked about 3 types of traders, but my approach, my own specific approach, is that I'm really looking for setups where I can make the easiest and the most money on, and they're not going to come back. And that takes a lot of stress, emotion, analysis paralysis, all the other thinking equations out of it, the emotional component, all these things that typically are what destroy traders' good results. And we've talked about that before. Most traders can't actually sit on their hands. They don't have a real edge in the market. They're just trying to trade all the time. Again, we're talking about the majority. They want to trade every day. They overtrade, they get emotional, they get impulsive, and then they engage in irrational behavior when they get behind the keyboard. So often traders will say, what's the entry, what's the exit? But see, when they get behind closed doors, behind their keyboard, they turn into a degenerate gambler, an absolute degenerate gambler, and they self-sabotage all their good results. And I always come back to this, I repeat this all the time. The behavior of the trader is the number one reason most traders fail. A lot of it has nothing to do with how much they know, how smart they are, how disciplined they are, how great they are at what they do, and all these other things. But because they do other things in between all the good things they do, they destroy or self-sabotage their results. And I know that from experience, which is why you have to train your brain to focus on setups that make you money. Build your muscle memory on those setups so you know exactly how they'll present, how price should behave when you're in that setup window, and how hindsight helps you identify where it's really easy on certain days to make a lot of money based on the setups that you've mastered. Master 1 or 2 of those that repeat, hunt them out on any instrument, instead of chasing movement and trying to figure out the market and start a science project each day. And then one day, you do a lot of good days, and then the one day you blow your trading account out, and the cycle repeats. And how do I know that? Because I've lived it, and I've done it repeatedly for 15 years. Had to figure out how to straighten myself out, number one, but then also have an approach, a process each day that allowed me to identify setups where I had an edge in the market. And like Bill Lipschutz says, if most traders would learn to sit on their hands 50% of the time, they would make a lot more money. Now, not only an edge, here's the thing to think about. Not just an edge, but an edge where it's almost impossible for you to lose. Which brings me back to the original slide, and I tell people this: quit taking losing trades. What that means is quit going to the market every day and trading. Start identifying instruments that are set up with easy money-making trade setups where it's almost impossible for you to fail, and on the larger 3-day templates are scalable to make a lot of money if you have the discipline and the patience and the skill set, not only to identify the instruments through your daily process and watch list, but then the patience to sit on your hands and let that template unfold into your timing window and understand that intuitively, every little nuance about your setups, so that you have the ability and skill set through repetition, build confidence through accomplishment to scale those trades up in size as your account grows. Now, on a Monday, what I'm often hunting, day 0 template, a 3-day template that can possibly offer us a classical charting range expansion target. Trading the Asian session, and I don't get that on a Monday, my next day, I'm looking for the same type of opportunity. We now move ahead one day. We've got our Thursday, Friday, Monday, originally on Monday for the possible pump, coil, and range expansion, either reversal or breakout. But we come to our Tuesday window and we've got peak formation high, peak formation low, day 1, day 2, day 3 on our Tuesday for a 3-day setup on Tuesday, day 2, which typically expands the range. The day 0 template. Now, the next most important thing is when we have our trade setup, we have 3 levels in the market that every single trader has every single day when we come to the screen. High of day, high of week, low of day, low of week, and yesterday's closing price. Paul Tudor Jones, always think of your entry point as last night's close. Now, we talk about this in every video just to reinforce the concept that these are the three levels that I'm looking at when I'm looking to enter the market. Now, if a market expands the range, I redraw the levels, high of week, high of day, or low of week, low of day. But the closing price level, again, these are three levels that every single trader has when we come to the screen. This is yesterday's information. Hindsight pays. We have a peak formation high on Thursday, Friday. We coil sideways. Monday's opening range closes as a first green day. Page 64 in the playbook. Now, I constantly talk about Peter Brandt having a big impact on me because of his classical charting background, and my early learning, my early study always was all based on Edwards and McGee, Schabacker, and Peter Brandt. And the reason why that's so important is because when we get a rectangle for a possible range expansion, this is where asymmetrical risk-reward opportunities come in, because we're expanding the range in a geometrical box that once this 3-day template breaks out of in a parabolic manner, we want to be in the market in the parabolic opportunity. If you understand what setups you are hunting. Our basic model for trade entries, page 29 in the playbook, is a very simple model when you have the template set up for removing analysis paralysis for traders to just have a non-subjective approach for a one-bar stop as the market's coiling into a parabolic setup. And when traders get good in understanding this, they have the opportunity then to also be scaling into this move. Because why? Timings, levels, behavior of price. We know exactly what we're looking for. We have price coiling at the closing price level in a range expansion 3-day template for a large scalable opportunity on copper in Asia. Now, the big thing to understand, though, is that this can show up on any instrument. Any instrument. Now, if you're an Asia session trader, of course, on day one or day two, this could be an opportunity that may present if you're on top of your game. You go back on the weekend, you're identifying instruments that may close and breakout, or they've had a pump day and coiled sideways into the close of the week, or the week itself has closed and breakout. We have a peak formation low on Monday, the opening range of the week. And you will notice that Wednesday's closing price from the previous week forms the basement of our larger rectangle. Pump, coil, first green day, explosive, parabolic, scalable range expansion opportunity for Asia session traders on copper on Tuesday, day 2, which typically expands the range. You know what you're looking for. Instead of chasing movement, you can identify simple, reproducible setups on any instrument that are scalable in size, that are frequent, and there's no science projects. Quit taking losing trades and focus on scalable, rinse and repeat, best playbook trading setups. Now, London session traders on Wednesday, the midpoint range of the week, had a fantastic parabolic opportunity, a reversal trade. There's only two types of trades when we get to day 3, either a trend trade or a reversal trade. Now, Tuesday, day 2, broke out. We broke out of the opening range. We had a first red day on Monday, the opening range, but they closed in breakout. That's a signal. That's a signal for traders to potentially look at this instrument and maybe even its cross rate pairs for an ideal best trade candidate for a parabolic scalable reversal trade on the Swiss franc. Now, we have a market that closed in breakout. It broke out again right at the open in Asia. That's a second clue. And coiled sideways. Markets that coil sideways may be potentially preparing for an explosive move. Now, one of the things one of my mentors, Bill McLaren, taught me repeatedly, and it took a long time to sink in, is that false breaks can be the beginning of large moves. So when a market closes in breakout, we have all time frames involved, not only the little day traders that start off the day from Friday's closing price when the auction process begins to go back and forth. As we expand the range, we get hourly, 4-hour. Then we break at daily level. We get breakout traders in the market. But when we close in breakout now, we've got all time frames involved. And often this breakout and then another breakout on the day can turn this breakout into a huge reversal or trend trade opportunity depending on how price sets up on the day. No major red news on the schedule, and we have an explosive London session parabolic opportunity for traders for the US Swiss franc. A beautiful close and breakout on Tuesday, day 2, the initial bounce, Monday's opening range. Tuesday expands the range, closes and breakout. We break out again, coil sideways, again a classical charting pattern, a rectangle for a range expansion reversal opportunity on Wednesday, the midpoint range of the week for London session traders, a scalable opportunity on day 3. Now, U.S. session traders had an excellent opportunity on the euro on Wednesday in the New York session. We had Tuesday closed in breakout. So we have Monday's opening range. We've broken out, closed in breakout. That market has moved in London and continued to auction higher. A day 2 runner that closes in breakout, that's a signal day for U.S. session traders. Now we just looked at the Swiss franc. Now, the Swiss franc might have been on this trader's list, for example. But when they come to the screen, it's already taken off in London. So the next best candidate they're going to look at to see if it's moved too is the euro. But lo and behold, the euro has not broken away yet like we saw with the Swiss franc. Now, we saw those 3 levels on the chart earlier, the high of week, low of day, high of day, and closing price. Now, this is an example of where the market has actually broken out again and pulled back to closing price and is starting to auction higher. We redraw our levels. The range expansion has continued into day 3, so we have our low of the week and now a new high of the week level as we head into our New York session. Major red news, first hour, we talk about the 10 a.m. club. This market pumps up through the wick that's made on major red news before coiling. New York open, and we open up at 10 a.m., third hour, inside of our universal entry criteria for the parabolic collapse into the close of the day. All 3 trades that we've looked at today are ACBs. They ain't coming back. So they're scalable, they repeat. It doesn't matter what the instrument is. The first thing we saw that was an opportunity on the Swiss franc and the euro were closes and breakout. Copper in Asia was a larger 3-day template, and also understanding, looking at range expansions as profit targets of geometrical structures. Classical charting, Peter Brandt, Schabacker, Edwards and McGee, horizontal coils that build, giving us a parabolic setup for a scalable opportunity. Wednesday, day 3 for New York session traders. Now, here's the next most important part, the mindset, behavior, and beliefs of the trader. Looks good after the fact. Anyone can do that. Let's see you do it live. It'll help me learn. What setup are you hunting? Do you realize these setups show up every single week? The same setups on different instruments. Hindsight pays. But the difference is that traders who have a process and they're looking for those opportunities repeatedly know exactly what they're looking for. Do you really think you will learn anything when you don't even know what you're doing? So you need to think about something. Taking trades on average is 50-50 for amateurs. That's what amateurs do. Professionals execute repeatable, rinse and repeat, risk-reward opportunities where they have a scalable edge in the markets. So what setup are you hunting? You watching somebody live, you don't even know what you're looking for. What session? What day? What setup? What setup are you actually hunting? Or are you looking to take trades? It's a complete mindset shift. If you understand what you're looking for, you will understand the power of hindsight for identifying scalable, parabolic, reproducible, easy money-making trading setups. So the most important thing that I'm focused on each week is scalable, easy money-making trading setups, whether it's a 3-session setup or a 3-day template. My question for you is which easy money trading setups are you hunting? Which ones have you mastered? I'm not worried about gaps, pushes, sweeps, premiums, discounts, Muppet soups, etc. I'm looking for setups. Specific setups that show up again and again and again on any instrument. I have zero interest in taking 50-50 trades that will never be reproducible or scalable on multiple instruments with zero thought process, zero thinking, zero emotion, zero stress, and for the most part, zero management, because they will go till close in most cases. Which takes us back to our first slide. Simple, reproducible on any instrument, zero thinking, zero emotion, zero stress, zero management. They're scalable in size. They're frequent. There's no science projects. I stopped taking losing trades, which means I'm not going there every day trying to trade. I'm looking for specific setups. The ones that are the same. I might have one for a Wednesday, the midpoint range of the week. There might be one on day 2, Thursday, the backside of the week, for a range expansion or range reversal opportunity. Then, of course, we have our closing range of the week. And we can look for the same type of criteria. A market that is closed in breakout. Has it given us that coil? We just looked at the front side in the essence of time. But think about that over the weekend. What setup are you hunting? That's my approach. You don't have to agree. You can trade whatever's working for you. If you're making money and it's scalable in size and it's easy, zero stress, zero thinking, and you're happy with that, keep doing what you're doing. But if you're looking to do things differently, identify easy money-making setups that are scalable and then find those on any instrument. And how frequently they are will depend possibly on the size of the basket of instruments that you're following. Keep it simple. If it's simple, you can reproduce it on any instrument. And if they're scalable setups, you can continue to grow your trading business in size. And if you have a basket that reflects those opportunities in terms of the number of instruments, that will allow you to have that opportunity frequently with zero science projects. Get rid of the lab coat. Keep it simple. Keep it scalable. Keep it fun. Like Paul Tudor Jones says, make trading a pursuit of pleasure. Have a great day, traders, and enjoy your weekend. And may the markets go with you.